Welcome to Conversations with Changemakers. I'm Elizabeth Filipouli, the founder of Global Thinkers Forum, an international non-profit organization that promotes accountability in leadership. Over the years, we have built a diverse network of social impact thought leaders with whom we share a common vision to promote values-based leadership. The forum was incubated at Oxford University's Said Business School in 2011. In this series, we interview change makers from different parts of the world because we want to hear how they're going through this coronavirus crisis as professionals and as individuals. We invite them to share insights and forecasting for the day after. Today, I'm interviewing Vasilis Kyriakopoulos, investment expert who recently joined the World Bank following a career that took him to London for a few years and then Saudi Arabia. Under his new role, he will soon be based out of Washington, D.C. Vasilis, welcome to Conversations with Changemakers, and thank you for your time today.
Elizabeth, thank you so much. It's great to be with you. Thank you for inviting me.
I wanted to invite here your personal insights, given your rich international experience across the investment ecosystem globally. Vasilis, what we have witnessed over the past 4 months are events that perhaps our generation would never have imagined would happen. Was it lack of foresight? Was it the unpredictable nature of what has happened? I don't know really. This will be assessed more accurately perhaps by historians. But what I do know, as all of us, is that we are at the heart of a cyclone and that financially we are all affected. What is your prediction with regards to the global economic impact from the coronavirus crisis?
Well, that's the million-dollar question, I guess, right? The predictions and projections change on a day-by-day basis. What is astonishing is that there is a disconnect between what you see in the public markets, right? If you look at the performance of indexes like in the US, the S&P, and etc., they're back at the highs they were before the pandemic. And the disconnect between the private markets, what you see in your daily life, where you see a lot of people being stressed, a lot of people losing their jobs, a situation with this pandemic that mostly and critically affects the most challenged individuals, the low-income ones. Having said that, I'm an internal optimist myself, and I think that although we haven't seen a crisis like that before, I think that nations and people, they are resilient, and this will be something that we will, survive and go through. Of course, it's not going to be exactly the life that we have. It's not going to be exactly as it was before. I see some sectors being particularly affected, and I come from Greece, so Greece is a destination for tourists in the summer. Right? I think like 20%, if I'm not wrong, of GDP of Greece is related to the tourism sector. And that's going to be affected. And a lot of people on their daily life, their income are going to be affected. Well, that's the key challenge that I see for these parts of the population.
And what we've also seen, Vasilis, is that the COVID-19 induced turmoil included US oil prices turning negative for the first time in history, which happened, if I'm not mistaken, on the 21st of April this year. It seems that the companies best placed to withstand the current crisis are the ones that have pursued the most progressive long-term strategies, those, for example, with gas-rich portfolios, and those that have been making substantial investments in renewables and innovation. Do you agree?
Well, first of all, what happened back in April, I think for a few days that you saw a negative price for oil, I think that was more of a technical issue, some options that were maturing on that week, and there was oversupply. And then you'll see that, the next option was positive, and then there has been a rebound on oil prices. That's the technical matter. But having said that, there is a huge decrease of the price of oil. Now there is an oversupply and there is less demand. That's the fundamental thing. And while there is less demand, people were in their houses. I mean, there were no more airlines operating and all these things that we know. I am long on the sector, if I can say it in such a way. At the end of the day, this is a commodity that is needed. Of course, you have the substitutes of renewable energy, but let's not forget that the world is a big place, right? There are countries that depend on that. There is still industry. I see this period as a short-term break where things will come more towards the normality that we had in the past. The big oil operators, they have started the process of diversifying. And, these companies, it's not the very first crisis they go through. And they take measures. You see, I remember the example of Shell. They cut their dividend. They're cutting the capital expenditure. They're taking measures. And at the end of the day, Elizabeth, if you look at the oil prices, this is a commodity. And at these levels or close to these levels, when you have a market that no country, right, or no operator can turn a profit, this is not a situation that's going to continue, because they will scale down their production and the price will rebound.
So let's get to a part of the world that you based yourself for about a year and a half, Saudi Arabia. You were the vice president of the Public Investment Fund. How were the Saudis handling the crisis? And of course, they are an economy that has been very much oil reliant. So let's connect it to what we were just talking about with regards to oil prices.
I had this experience being on the ground in Saudi Arabia. And, for me, first of all, let me say it was a big change, right? I was for almost a decade in London. And being in the Middle East for the very first time was a big change for me. Now, the moment I went there, I saw that the Saudis, they were very keen, before any crisis or anything, diversifying their economy, right? Sovereign Wealth Fund was making huge efforts in investing to diversify away from oil. Of course, still, energy and oil is the biggest industry. I think it's like 80% of the government revenues is tied to that. And, when you have a commodity that loses 50% of its value, it's challenging. From what I see is that they do take measures. Recently, they increased their VAT from 5% to 15%. They have cut expenses and budgets throughout their ministries, the ministry budgets. So they're taking measures. I don't know. It's quite unfortunate for Saudi Arabia and for the Middle East or any, commodity oil producing nation to have the situation. But it's a good thing at the same time, in a sense. It brings, I think, forward the urgency to diversify their economy away from oil, away from natural resources. If you see, it's quite interesting though. There are two things. There are the longer strategic way to look at it, which is what they're doing, and I think it's a great thing that they're doing. And there is the tactical opportunities as well, because going back to your previous question about the resilience in oil companies, of course, Aramco is the biggest oil producer globally. Although I was not part of that, right? You see that the Sovereign Wealth Fund actually, during the crisis, invested in some big oil majors. Now, I think that's a great thing to do. Tactically, because you go into some companies, into the sectors at depressed prices. They know the market themselves. Everyone, I think, knows that at some point the energy sector will rebound, and it actually has. Right? If you see, I think that the bottom of the sector was the market was mid-March. Since then, the panic, I guess, has gone away, and there is a rebound in prices. So, in my mind, you sort of see these situations as an opportunity. Right? They were on the right track of diversifying, of investing in other sectors, of bringing industries in Saudi Arabia, in the Middle East. Now, this is a great opportunity to accelerate this trend and accelerate what they're doing.
And of course, as you mentioned before, to diversify one's portfolio and to build on human capital. Now, talking about human capital and portfolio diversification, COVID-19 will have a dramatic long-term impact on consumer shopping habits, speeding up the shift to online retail. And here in London, for example, there are serious concerns that High Street will not be the same anymore. I was listening to an interview by Theo Pafidis yesterday, and he seemed very concerned that people have adapted new habits now. So it will be a very different retail world. What do you think?
Elizabeth, it goes back to Schumpeter, right? The concept of creative destruction. It's not exactly creative now, it's because of the situation. But don't forget that the underlying trends were there. Amazon, which is a hugely successful company, has been hugely successful in taking away market share for many, many years. So this situation, I guess, accelerates again this trend that we have seen. Me personally, I do a lot of shopping online. Most of the things I consume, I do them online. So the e-commerce was there, and this accelerates this trend, I guess. It's unfortunate for the people that are in specific, or the companies that are in specific industries, like in the high street, as you said it. But I guess this is the nature of business, right? If people prefer to and change their habits to move to e-commerce and online, and if there are entrepreneurs there and companies that can deliver a service that people actually want and use, I see that as a good thing, to be frank with you. It's a change, of course. There is some suffering for real estate, there is some suffering for retail, but that has always been the case. Every few years, I guess, there is something that a new industry that is growing, and part of this growth is at the expense of existing industries and existing businesses.
True, I couldn't agree more. And of course, we see so many changes. We can no longer meet as we used to do. We work from home mostly. We are not able to access restaurants and coffee places, so the way we eat has changed. And of course, as we just mentioned, the way we shop. The working world rapidly moves from business as usual to cautious travel, office closures, work from home. So there will be inevitably an impact on real estate, both private and commercial. It will transform further the way we work or the concept of work. How do you see the real estate market being affected in different parts of the world? I mean, it won't be the same, perhaps in the Middle East, and the same in London or in the US, but more or less, there will be a wave of changes that will affect that industry around the world.
Yes, absolutely. I mean, I see this period now as a test as well. So during this period, I work from home, and most of my friends and the people I know work from home. So we had to do that, but at the same time, we can see and experience collectively if that concept works. And from my perspective, and by talking to my friends and people in other companies and institutions, although you have some limitations, because you can never replace the one-to-one conversation, the interaction you have with people, you can actually get work done. You don't need to be in an office to work on a presentation, right? To work on a document. You can work on that from your home. I guess that we will have a hybrid onwards, where there will be the office, but because there needs to be the office, you can never replace the interaction, the physical interaction with people. But at the same time, I think that you can do a lot of tasks remotely. And that is going to have an effect on office space, I guess. That's going to have an effect on real estate as well, if it happens, right? So why in real estate? I mean, the reason why it's so expensive for all of us that were in London to live in London, because it's highly sought after. Jobs were there, the office was close by, it's very convenient to be at the center of London, and there is a huge demand for that. Now, if I don't need to be in the office in London every single day, and I only need to be there 2 times per week, and the rest of the time I can work from home, I can do my calls remotely and all these things, then my quality of life will be a bigger property, a bigger house, a little bit further outside of the urban city of the city, right? So that, I guess, you have less demands for a small apartment in London, and that should affect the price of this asset of residential real estate, and as we said before, for e-commerce, commercial real estate, right? If it happens like that, and still we are in a process that people are experiencing how it is working remotely, and institutions look at that, I guess there will be an effect on real estate onwards. I've seen some companies that have already announced that until the end of the year or going forward, employees can work remotely. So you see some leaders in that, some companies that actually have gone ahead.
Vasilis, how do you see the US dollar status as a reserve currency, given the huge amount of new money supply?
Well, that's a great topic. And I mean, what is happening now, and going back to what we discussed earlier, you have the public markets, the stock exchange, the Nasdaq, the S&P, again, back at 3,200 points with the S&P. And you see that one of the fundamental reasons is this extraordinary move by the Federal Reserve and by the administration in the US to effectively print a lot of new money. It's quite fascinating, the fact that a government, we have fiat currencies now, can create money out of thin air, if I can call it like that, and use it to support the economy. Now, what happens that at the time of stress, I guess this is the right thing to do, and I think was the right thing to do. But you create a lot of more additional liquidity in the market. And if you create so much more liquidity in the market, so much more currency coming to the market, you have the risk of inflation. And you have the risk of people saying, okay, what is the value of these dollars that I'm getting as a salary? And if this dollar's value is not as stable, or there is a risk that other currencies will appreciate or not, then you're starting to have doubts on it. And of course, the US is the superpower of our era, right? It's the Rome as it used to be. But you have competing powers like the biggest competing power, which is China, that could theoretically in the future challenge that. So yes, the world trade, happens in dollars, but we should be, as an investor, right, we should also think and monitor the situation, how much confidence exists in the dollar and how is that going to develop in the future. I'm no expert myself. I don't want to portray myself as an expert on currencies. I don't think there is someone that is an expert in currencies and how it's going to develop. But as an investor, I would also be cautious about investments that may be affected because of the monetary policy as well. It's not something that you can control, let's be frank. You cannot control for it, but it's something that you can have in mind and maybe think of where your exposure is in terms of assets and geography.
This conversation today is more under your personal capacity and your insight as a global investment expert. Can I ask you, where would you invest, as an individual, as a professional? So what would be your priorities in terms of investing your own money in a world that will be very different, in a world that it is quite uncertain and complex? But as you mentioned before, as in every crisis, there are opportunities. So through innovation, through technology, through the industries that we see being on the rise during this pandemic, there are definitely investment opportunities. Would you have your own, I wouldn't say suggestions or advice, no, but do you have your own priorities when it comes to your own investments?
So as a personal investor, I just want to iterate something. There are two elements. There is an industry or a company that you're buying, and the prospects can be great. Like we said, it seems that e-commerce, I mean, it have great prospects. And there is also the price that you pay for this investment, right? So it doesn't mean that a company that is great and doing, that has a lot of growth and potential, it's a great investment at the same time, because it very much depends on the price you pay to participate in this, to be a shareholder or in this company. Now, I guess that the right time to invest is usually when no one else wants to invest. When there is stress, when there is panic, when there is fear. And we saw that in mid-March. Since then, prices have recovered, but in the public markets. Now, if you want to be opportunistic and you have the capacity to do it, you can go behind and put your money, I guess, in companies that are gonna benefit from the situation. What I'm saying by that, so if you have a company with a strong balance sheet and which is leader in what they're doing, and there are competitors that are less established and they have problems with their cash flow and all these things, this is probably a time now for consolidators to take advantage of these opportunities. And maybe you can think of moving a little bit your portfolio in situations where you can take advantage of that. Again, I'm an optimist myself. I think life always continues and will continue. It's the adjustment, right? So you have to, I guess, think about sectors and opportunities that have been affected, but there is an actual need for what they are offering, and that there will be a rebound on their business. And that's what I try to do and how I try to think about things. Fear is not a good thing. Following the news every day is not a good thing. You follow the news, but not the commentary on the news, right? There is kind of generally, there is a kind of a herd approach to people. You should stick with the things that you know, the industries that you know, the fundamentals, and avoid the noise. I mean, we have the benefit, I guess, of having so much information in front of us. But I think the key skill in order to be successful is to try to find information and filter it. I think that's the key skill that one can have. Avoid the noise, look at the facts, understand what has happened in the past, and act accordingly. An example is that I would say, the most affected sectors right now are travel and tourism. And do I actually think, you as an investor, would you actually think that there's not going to be no more travel going around? There's going to be no more online bookings. There's not going to be no more need for all these hotels and the infrastructure. I don't think so. I think this pandemic is something that came. We will adjust towards that. Hopefully there will be a vaccine at some point. It seems that it's not as severe as we thought it was at the very beginning. And I think life will go on. And if you can find assets like that to invest in these sectors that have their prices, or that where you have willing sellers for various reasons, but they want to exit or divest, maybe there is an opportunity for you to participate in that. And I would think about this opportunity. Summarizing, panic is not a good thing. Fear is not a good thing. I think we should think long term. And although we have this situation and it's unfortunate for all of us, I don't think that life is going to be materially different going forward.
Vasilis, thank you very much for your voice of reason and calmness, and for your time today, of course.
No, absolutely, Elizabeth. Thank you so much. It's a pleasure talking with you. Thank you.
And thank you for listening to the Global Thinkers Forum podcast, Conversations with Changemakers. Follow us on social media on @GlobalThinkersF on Twitter and you can email us on info@globalthinkersforum.org. We invite you to explore our work and join our incredible network of people who want to actively do something positive for our world, a world in crisis. Keep safe, keep well.